Legendary investor Michael Burry is now predicting another huge crash.
They're going to have to start laying people off. It's not just the earnings or the revenues, the profits that are plummeting. Shoplifting, which has jumped about 50%.
Michael Burry, famously played by Christian Bale in The Big Short, is world famous for his bold and correct predictions. In this highlight, George Gammon breaks down the unique factors that are contributing to the very bearish trends that Burry is feeling so that you can prepare your portfolio for what's to come.
Legendary investor Michael Burry is now predicting another huge crash. We all know that he foresaw the last housing collapse. He predicted the SPAC collapse that we've seen in 2022. And most recently, he predicted the crypto crash. And now he is so bearish about the stock market and the economy, he just came out with this tweet where he said, "You have no idea how short I am," meaning the short position in his portfolio. I'm going to explain why he is so bearish in one simple, fast step. Let's get into it. Step number one, it's all about the bullwhip effect. Michael Burry talked about this a couple months ago, but now we're seeing it play out in real time, right in front of our eyes. Let's go to a chart here of Amazon stock going back to, let's say, January of this year, all the way to today's date. On the left, we go from $50 up to $200. So back in January, it was right around 200, maybe 180, 190. And then since then, it's pretty much gone straight down to where it is today, $97. You say, okay, George, well, it's definitely in a bear market. And you would be right, but let's look at the degree to which it's in a bear market. Amazon stock, or the Amazon company, is the first company to lose $1 trillion in market cap. And this is a bellwether for the entire economy. Let's go back to 2019, where Amazon had about 800,000 employees. Fast forward just about 2 years. After multiple rounds of stimmy checks, meaning free money that increases aggregate demand, gives the economy a sugar rush that is completely unsustainable. We fast forward to today's date, and Amazon has 1.6 million employees. They have literally doubled their workforce just since 2019, a 100% increase. So you have to ask yourself why? Because of the bullwhip effect that Michael Burry warned about, that we're seeing play out in real time right now in front of our eyes. So what is the bullwhip effect? It's actually very simple. All of these CEOs or just small business owners, they see all this demand come into their store, their restaurant, or Amazon.com. And they think that it's going to last forever because they don't understand macroeconomics, and they don't understand that all these stimmy checks that went out gave a boost to the economy or aggregate demand, but it was only temporary. And now what we're seeing is that sugar rush come crashing down, meaning the purchasing power of all of those customers is starting to decrease and go right back to where it was in 2019. The problem is, in my opinion, it's going to go even lower than it was in 2019, creating massive amounts of layoffs going into 2023. They just laid off about 10 or 11,000 people. Now I'm talking about Amazon. And this was a result of all of this hiring due to temporary demand. But it's not just Amazon. It's also Target that is falling victim of this bullwhip effect that Michael Burry believes is going to take down the entire economy.
Here's an article from CNBC. Title: Target warns of soft holiday quarter as profit tumbles and sales slow. And when they mean tumble, they're not kidding. If we go down further in this article, we see that their profits fell by 50% in its fiscal third quarter. And unfortunately for Target, it gets a lot worse. The company said it plans to cut up to $3 billion in total cost over the next 3 years. Well, why? Because of the bullwhip effect. They hired way too many people because of the artificial demand created by the government. They also bought way too much inventory. So now what's happened is they're having to fire sell that inventory. They're going to take a loss on that. Their profit margins go down. And as a result, their overall profit, like we see, is down 50%. They're going to have to start laying people off just like Amazon. And that negatively impacts aggregate demand. Let's keep going. Target echoed many of the same themes as competitor Walmart. Consumers are feeling strained by higher prices for groceries, housing, and other necessities. They are buying fewer full-price items and holding out for promotions instead. To stretch their dollars, they are choosing smaller items, value packs, or retailers' own less expensive brands. You see what's happening is people are running out of money. They can't even afford to buy the same amount of stuff they bought in 2019, let alone 2020 and 21, when all of these retailers were hiring all these additional people and increasing inventory. And if you think that's bad, you ain't seen nothing yet. Unfortunately, I always say in my videos, I warn people in advance. I hope you're sitting down. It's not just the earnings or the revenues, the profits that are plummeting for retailers like Target and Amazon, but because their customers are getting so pinched by inflation and all these other dynamics, they're actually resorting to stealing the things they can't afford to buy. Right here from Target's CFO, he said Target is seeing a higher level of shoplifting, which has jumped about 50% year over year. Let that sink in, guys. Shoplifting at Target has jumped 50% just in the last year. So far this fiscal year, those losses have had more than a $400 million impact on Target's margins. I think that in and of itself could be a good reason why Michael Burry is predicting that we're going to have another economic crash.
If you enjoyed that video, you have to check out this one where Brent Johnson and George Gammon reveal what two critical things the market has awoken to in the last 12 months that you simply have to understand to not get blindsided in the coming weeks.